the Emerging Markets Equities podcast by Aberdeen.
Hello, this is Nick Robinson from Aberdeen, and you're listening to the Emerging Market Equity podcast. Together with our expert guests, we'll dive into the driving forces behind emerging markets and uncover the opportunities that are shaping the future of this exciting region. So everyone's aware that the Middle East has dominated news recently. However, despite the continuing tensions and conflicts in the region, it's part of the emerging markets that has grown from almost nothing a decade ago to now be pretty similar in size to Latin America in terms of the benchmark weight. When you look at how most emerging market investment managers allocate capital to the region, most tend to have fairly few holdings, as historically some of the markets have been quite tricky to gain access to, and most managers at least don't have familiarity with companies there, or the same familiarity with companies there as they might from more long-standing benchmark countries. Also, there's quite a lot of new companies in the region as more local companies decide to pursue listings there. So it's an exciting, under-owned and under-researched part of the emerging market universe, which should be ripe hunting ground for bottom-up stock pickers. So today I wanted to talk a bit more about the region and dive into some of the opportunities across the different countries and sectors. So joining me for this is my colleague Fraser Harle. Fraser is a portfolio manager and analyst on the emerging markets team based in London. He helps run our fund that's aligned with the UN's Sustainable Development Goals, as well as covering the utilities sector, and he also covers some other highly regulated companies. So he's something of an expert on the region, and he's just returned from spending a month there in the Middle East working out of our Abu Dhabi office. So Fraser, welcome to the podcast. It's great to have you on.
Thanks for having me, Nick. Pleasure to be here.
Brilliant. Well, how about if we kick off with just tell us about the trip that you made to the Middle East, whereabouts you were and what you did.
Yeah, thanks, Nick. It was a really great trip. It was actually my third over sort of the last 18 months where I went to Saudi and the UAE, one of which was actually with you. But it was great this time to have a bit of a longer trip where I could kind of soak up a bit more of the day-to-day experience and enthusiasm of what it's like to be based in the UAE. So our first port of call, really, or my first port of call was the EFG Hermes conference in Dubai, which was about 4 days long. It's a massive conference, I think the largest in the region. And this year, the bank hosted 220 companies across 12 countries. And my colleague Hakel and I, who were there, we were quite busy bees and met with 46 companies over those 4 days, with industries, going across from car rentals to steel pipes, all the way to hospitals, which hopefully goes a bit of a way to explain that, the region's a bit more than just oil and gas. And then after that, as you say, I was based in our office in Abu Dhabi with our colleagues, Peter Dunbar, and spent, a bit of the time flitting between Dubai and Abu Dhabi, meeting companies that we haven't had the chance to meet with before, as, it's great to be on the ground there. And also, have the opportunity to see a few assets, doing asset visits, where I met with Tabreed and Empower, a few district cooling companies, which was great to see in person. After that, during that actually, I had a short hop across to Oman for a day of meetings, which was definitely quite a different feel to the UAE, but still quite an exciting country to go and visit, with kind of quite a few upcoming privatizations or public listings of Omani Investment Authority companies coming up.
Yeah, that sounds like a brilliant trip. And of course, I remember our trip to Saudi and the UAE. I think that was last year, wasn't it? That was good fun. I suppose thinking about the different countries in the region, the main investable ones, at least, are Saudi and the UAE, with Kuwait, Qatar, and Oman a bit smaller. I mean, when you think about the different countries, how do you think about them in terms of the opportunity set in each country and how the investment landscape differs across the region? And then, of course, these countries all have quite different governance structures in the actual countries themselves than Western democracies. So how does that influence how you should think about investing in them?
Yeah, no, it's a great question, Nick. And as you mentioned at the start, we've seen quite a large increase in the weight of the region in our index. It's up about 60% versus 5 years ago. And, you've seen the UAE kind of triple in its size of index weight, and Saudi also grow by more than a third. Um, so I think, like you mentioned, each country has its own sort of quirks. And I think, the composition of, what's actually on the exchange is quite an important factor in terms of how we see what's interesting in one market versus the other. So in some of the smaller markets, like you mentioned, Kuwait, Qatar, and Oman, the indices are actually, pretty heavily dominated by financials. I think Kuwait is maybe the most extreme in that case, where three banks make up an awful lot of the index. But that kind of constrains a bit about what we've been able to find within some of those markets. Whereas maybe Qatar, you've got a bit more of the gas story with the increased in production from Qatar Energies, and then Oman, the smaller market as well. I think because it's a frontier market, you've got even more perhaps constrained liquidity than you would in the others, but there's a bit more of an ambition to graduate there. I think in Saudi and the UAE, as you say, are like a bit of a different kettle of fish. So, they're the largest in the region, but there is still kind of like a bit of a relevant difference between the two. I think Saudi, because it's got such a large population, you've seen some of the social reforms there. You've got a bit more of like a domestic consumption story that you can invest in there, and maybe the emergence of some domestic manufacturing arms to serve the for local industries, whereas UAE is a bit more sort of arms outstretched to the world. 90% of the population are non-Emirati, and kind of outside of maybe the ADNOC complex and in the UAE, most of the listed companies are geared towards sort of financials, and kind of population growth proxies there. So, I mean, I think, like you maybe mentioned at the start, they're all a bit different, but I'd say as EM investors, they kind of follow a few good rules of thumb that we like to see, which are kind of, young, growing populations, broad infrastructure investment going on, and kind of more broadly liberalizing or maybe more conducive business environments across the region, which is always, what investors like to see. I think in terms of the governance question, again, yeah, like you mentioned, it's an interesting one. These countries in the GCC, they're all effectively monarchies, right? And well, that certainly comes with a different approach than we have here in the UK, but there are benefits to that as well. I mean, I think what that really gives the economies and kind of how it opens up our opportunity set is kind of a longer term planning and policy continuity that perhaps we see a bit more volatility in compared to the likes of other emerging markets. And with the ambitions set out in the respective sort of vision plans from each of the various countries in the GCC, these can kind of be given a bit of a kickstart or a helping hand from government directed sovereign wealth funds like the PIF or ADIA or Mubadala. And that kind of helps, and the ambition, I guess, longer term with the kind of governance structure that these countries are set up, and how they aim to diversify the economies, is to do a bit of future proofing for themselves from sort of swings we see in oil price and the energy transition, which continues to be ongoing.
Yeah, I mean, I'd like to kind of dive into that a little bit more in terms of, you mentioned the vision plan and the attempts to diversify economies away from oil. I mean, how do you think that's going? I mean, to my mind, that's been one of these themes that's been in the region that the governments have talked about for well over a decade now. And we do hear news flow about it, but it's not clear to my mind exactly how that's going.
Yeah, I mean, there are different schools of thought. I mean, I'd certainly say that these are quite long-term projects, right? But the progress to date, and I think, the ambitions, there have been somewhat noticeable. There will obviously be hiccups along the way, but I think it's important to maybe look at it at sort of the country level. So, I mean, if we compare sort of the last 5 years, if we're looking sort of 2019 to 24, where we've got the latest data, the UAE's increased its share of non-oil GDP by 7.5%. Saudi's been even better than that. It's increased it by 15%. And the forecast that we see, Nick, when we read some of the material that comes out the banks, is that this non-oil side of the GDP should continue to grow at a much faster clip than sort of the oil linked GDP. You know, it is fair to say that while these economies continue to diversify, government budgets are still definitely very, very sensitive to oil prices in that kind of adjustment period as they go through that diversification. And that can kind of be seen by some of the differences or reliance of the various starting points and the required break-even oil prices for government budgets. Um, I think one of the main takeaways for me at the conference there was the confidence that lots of corporates talked about in terms of the change of mindset as part of the diversification away from oil. Lots of companies talked a bit about how, historically you saw when there was large oil price fluctuations, the government would maybe, move away quite sharp and swiftly from government project announcements. You'd see sort of like a build-up of receivables from government entities on private enterprise, and kind of further exacerbating sort of the choke on the system from when oil price volatility was higher. And I think these days, you're seeing governments being a bit more willing to appreciate it's about the destination, not the journey, to use that cliche. And kind of being more willing to take on a bit more debt or be a bit more flexible in supporting the economy during that period.
Right, and I suppose one of the things that, or one of the big themes in certainly in Saudi, that's somewhat linked to the diversification of the economy has been these social reforms in terms of kind of liberalising, so women being allowed to drive cars, allowing people to go to theatres, cinemas, kind of co-ed classrooms, all that stuff. I mean, how is that impacting the economy and I suppose companies in particular? This kind of emerging kind of new consumption class that's being created.
Yeah, I mean, I guess for a start, it sort of opened up, what should be half of the economy is a more direct consumer base than it was previously. So that's always good, for investors to see. I guess moving from sort of like pre-reforms, I think employment of women in the country was call it like 18% in 2016. We've seen that increase, all the way up to 36% on the latest data. So it's been quite a material shift in the employee base of companies, and also, just the take home pay of Saudi families. I think dual income families are now at sort of 32% of households, up from kind of a similar percentage of female employment in 2016. I think the opening up of the kingdom to sort of various entertainment options and more liberal reforms has had some positive effects for some companies and maybe more negative ones for others. I think one that I found quite interesting was a recent meeting we had with the owners of the Domino's franchise in Saudi Arabia, and they talked about how historically, you saw the sort of options for people to go out to eat and how to have entertainment. It's been quite restrictive. There weren't cinemas, or it was less easy to go to cinemas, and that allowed sort of the chains that were there in Saudi, to kind of price, relatively freely. Margins were quite high. There wasn't too many options for people to go and do things. But more recently, you've kind of seen this proliferation of brands in Saudi. I'm sure you remember, Nick, when we were there. You're seeing brands, the American brands that you've never seen outside of America, having restaurants in Saudi. And what that's done to sort of these restaurant chains and how it's changed their earnings trajectory going forward is they've moved from kind of like price-led growth to more volume-led growth, and that's obviously, as a result of the competition as well, had an impact on their margins. I think another interesting kind of angle with the social reforms we've seen is the greater growth of internal tourism and internal Saudi demand for leisure spend. I guess we hear a lot about more in the press the country wanting to drive inbound tourism, but we hear quite a lot. Speaking to car rental companies, there's a recent IPO, which is a very large budget airline which does a lot of regional and internal flights there. So I think there's quite a lot of opportunity there too. And maybe finally, with more women in the workplace and more families with both the mother and the father working, we've seen kind of a bit of a resurgence in the interest in private school education or education of nurseries and things like that. And I think there's some interesting opportunities that arise in that sector as well from kind of these social and demographic changes that we're seeing in Saudi.
Yeah, and it certainly feels like a huge number of opportunities there that have opened up in in recent years. Just, I suppose, moving on to the UAE, I mean, I suppose I have to declare a bit of a vested interest in this one, and that, you know, when we look at our positioning in funds, yeah, we're quite overweight UAE, as we're seeing quite a lot of opportunities there. But certainly, you know, the market seems very exciting in terms of the amount of immigration that's coming in, business formation that's going on. Like you say, its arms are pretty open to the world at the moment. Yeah, what was your experience there when you were looking at companies in terms of some of the new opportunities that are arising in that market?
Yeah, no, I mean, I think there's always going to be the opportunity there, and I think we've seen it in more recent years as well of the the real estate cycle, and I think that's now extending a wee bit more from maybe the centre of Dubai out to Abu Dhabi now, where you're seeing sort of increase in property prices as well, and I think maybe if you're willing to be a bit more adventurous, all the way up to the Northern Emirates in places like Ras Al Khaimah, and I think there's a bit more durability to that now than there was in the past, and maybe a few more opportunities to think about different types of businesses linked to property that have kind of come to public markets, and one of those I maybe mentioned at the start was a district cooling company called Empower, and I think the first time I came across them was one of our first visits to the Middle East, Nick, and it's really quite a neat solution. So if you kind of think about the problem that the UAE has, about sort of 70%, if you can believe it, of their electricity is diverted to cooling, and so what these district cooling companies aim to do is they kind of have a big aggregate or big massive air conditioner that's located sort of close to in around of a kind of a broad group of skyscrapers or big houses or villas, and that itself is the one machine that does the cooling, and then pipes sort of cooled water down for a closed system, which is then converted to cool air on the other side, and that has the effect of cutting energy costs by 35% versus when you're using a traditional air conditioning, and actually on an emissions basis reducing it by 50%. So it's kind of, you're seeing kind of more opportunities arise in the region that are economic, but also have a bit of a nexus of sustainability there as well. I think also in the UAE, with the kind of the large population growth that we were mentioning, we've seen some interesting companies come to the market. I think people don't necessarily yet think about the UAE as much of a tech hub as it really is, but we saw the IPO of kind of, I guess, the Deliveroo or the Uber Eats of many of the Gulf countries. I think it operates UAE, Oman, Kuwait, and I think that was quite an exciting opportunity to kind of see what we will soon hopefully have a lot more of these tech companies come onto public markets, and good populations for population growth there. I think there's also, in terms of more opportunities like the immigration side of things that you talk about, there's always sort of the kind of infrastructure investment stories that you see in the UAE. So like toll road companies, again, I'll declare my interest now, the utilities that you see a bit more of. But yeah, no, I think the market's grown an awful lot, as maybe I mentioned at the start. You've seen a tripling of its relevant size in the emerging market index, and a part of that has just been more companies coming to public markets. And I still think it's quite early days for the kind of the depth or the breadth of the market there, which is still in the UAE a bit more sort of old economy based. It's not got as much of the new and shiny tech things, and a lot of the companies which have come to the market, or the majority to date, have been more state directed as opposed to necessarily pure private enterprises. And so I think we should hopefully begin to see more of a second wave of these public enterprises coming sooner rather than later.
Right, yes. Yeah, and I recall that from our trip. We met with a couple of companies that had essentially been spun out of the government, so probably not ideal investments in terms of companies that have been, I guess, used to competing in an environment where they're not protected by the government. Although that said, I think Empower was quite interesting, and I recall actually in Dubai going for a jog one morning and coming across one of their facilities and thinking, this is a 6 or 7 story high air conditioning unit essentially. um, what about these smaller countries? So you kind of touched on Kuwait, Qatar, Oman earlier. Have you been able to find anything interesting in those countries which we might be able to invest in one day?
Yeah, I have. I mean, I think to me, out of those three that you mentioned, Nick, I think Qatar's I find it the most exciting, and I had the opportunity to meet with a few Qatari corporates at the EFG conference. So they're both engaged in the gas industry. So you have both quite mouthfuls: Qatar Gas Transport Company and Qatar Navigation. Although their friends know them as Nakalat and Malaha, and I guess the interesting part, or the area I find a bit interesting, is just the amount of growth which is going to come from LNG out of Qatar, up to the 2030s, and then even a wee bit beyond as more of the North Field expansion continues. And I think LNG has, a reasonable role as a transition fuel over that time period, especially in Asia. As the world kind of transitions a wee bit away from the coal side of things and more towards gas and eventually to storage, and these companies operate. Nakalat more so operates a bit like a utility, a heavily regulated company. It's a gas shipping company, so they own and operate very large LNG carriers. They contract with the state-owned enterprise Qatar Energies and basically move this gas that's produced domestically. And sometimes they have some contracts in America. They have one in a few in Australia as well, around the world to the consumption centers. And I think, for us, the reason why I think it's an interesting opportunity is you kind of see a bit more about being able to invest along the growth of volumes by moving it around rather than having to worry so much about the price of the commodity which is being moved around, which is something that's often quite hard to find in emerging markets. And then, secondly, Malaha, which by coincidence owns 36% of Nakalat, so it's a bit of a sister company. It focuses a little bit more on the onshore, the sort of repairs, the servicing of these industries. So it operates much smaller vessels than Nakalat would do, and I think I met with them when I was at the conference as you mentioned in Dubai, and they talked about, for the increase in production of gas that Qatar is looking at, you're going to need something like a 50 to 60% increase in the fleet of vessels that service that, and that represents quite an exciting opportunity in terms of servicing as well, and especially as with tight shipyards globally in Korea and China, fleets are getting older and they'll need more maintenance than they did historically. So I think, yeah, if you were to press me, those were sort of the best opportunities I saw in the smaller companies.
I suppose one other thing about the region, it's quite different from the rest of the emerging markets in terms of how governance of countries works. What about ESG issues within companies? What are the issues that are typical to the region? And do you think companies, now that they're a bit more widely owned by managers, are beginning to take on board some of the kind of ESG messages that managers tend to communicate?
Yeah, definitely. It's a really good and important question, Nick. I think, much like we see with other emerging markets, is disclosures kind of lag what we see elsewhere. So while you might see companies that actually have, really robust and strong controls to manage sort of their operational risks, given the predominant investor base is domestic investors, and they can, meet with the companies more frequently or go and visit the sites more frequently, they don't often request the same sort of disclosures that foreign investors would, that help them build comfort, given they can't be as close to the companies on a day-to-day basis as they can be. So I guess just disclosures more broadly of sort of coverage of whether a company follows ISS controls, whether relative board committees on the governance side of things. And then I think one thing across the region that we continue as investors to push for is the setting of targets, whether that be, sort of a safety target, a level of diversity among the workforce target, emissions target or NOx targets. These are things that I think companies are more than willing to perhaps disclose on a snapshot basis, but maybe on a forward-looking element in terms of maybe constraining or reducing the impact of some of these risks. We haven't seen as much commitment as perhaps we have seen in other regions, but certainly there are areas which are positive too as well. I think in the Tadawul, which is the Saudi exchange, continues to hold. We've spoken to him about it before. Have workshops about in terms of disclosures and improving ESG links there, and companies are also required to produce an outward facing to investors corporate governance report, which kind of gives a rundown of the year and a bit more about who's overseeing what at the various companies. So I think, there's still a bit to go, but yeah, companies are certainly willing and open to engage on topics, and even if not necessarily disclosing the information, during meetings we'll be able to sort of share anecdotally and share figures about safety incidences and mixes on boards of directors and things like that.
Okay, so that's encouraging. Some steps in the right direction at least.
Definitely.
Okay, well, I think that's probably a good place to draw this to a close. So, thanks very much, Fraser. I really appreciate it today. It's been great.
Thanks for having me, Nick. It was good fun.
And thanks to everybody today who took the time to listen in. If you enjoyed it, then please download our other podcasts from our website or wherever you normally get your podcasts. Watch out for the next episode and tune in.
Thank you for listening to the Emerging Markets Equities podcast, brought to you by Aberdeen. Please subscribe wherever you get your podcasts, and for more great content, visit aberdeen.com.
This podcast is provided for general information only and assumes a certain level of knowledge of financial markets. It is provided for informational purposes only and should not be considered as an offer, investment recommendation, or solicitation to deal in any of the investments or products mentioned herein, and does not constitute investment research. The views in this podcast are those of the contributors at the time of publication and do not necessarily reflect those of Aberdeen. The companies discussed in this podcast have been selected for illustrative purposes only, or to demonstrate our investment management style and not as an investment recommendation or indication of their future performance. The value of investments and the income from them can go down as well as up, and investors may get back less than the amount invested. Past performance is not a guide to future returns, return projections, or estimates, and provide no guarantee of future results.